everyone is looking at the treasury, the 10-year treasury bill. And what are we at now this morning? As of this morning, according to CNBC, 4.243 is the current yield as of 10:02 this morning. 4.243 is the current yield. Wow. Basically, what we're looking at here are the highest yields on the 10-year treasury, which almost always directly relate to 30-year mortgage, fixed year, 30-year fixed year mortgage. And we're seeing the highest numbers for both 30-year mortgages and the 10-year treasury since October of last year. And so that's concerning. You might remember that mortgage rates actually fell down to about 5.25, and now they're over 7. And I think Mortgage News Daily has it up at 7.25. So basically 2 points, rounding off a little bit here or there. And yesterday, we took a peek up to 4.3. I know overnight in Asian trading, the 10-year yield hit 4.3, and that raises the question. That raises the significant question of whether we're going to go to 8%, whether we're going to go to 8%. So what we are basically at right now is what we would call a resistance level, because we capped at this number back in October of 2022, and we seem to be fighting some resistance at this point at the same level. But if we break through that level from a technical analysis point of view, it's likely then there's nothing really to stop this freight train, at least until you get the psychological barrier of 8%. And apparently that's exactly what the chief economist at the National Association of Realtors said the other day, Larry Yoon. Forgive me, Larry, if I mispronounced your name. No offense. Pronunciations on this channel are always a challenge. The 30-year rate is at a critical stage, according to the chief economist. And basically, he told Market Watch this: as the economy continues to show signs of strength, and if the Federal Reserve hikes its benchmark interest once again, rates could go up to 8%, which is actually something that I said on this channel before the mini banking crisis. Then, all bets are off once we had the mini banking crisis. But it almost seems as if that crisis is now, that was in March, has now resolved itself, I would say, and bailed out itself when the American people bailed us out, and forgotten about a little bit. But if rates continue to go higher, I think we'll see more bank defaults. But aside from that, basically, once we pass this 7.25 interest rate, and once we hit 7.4, 7.5, there's really nothing. And this is what the economists from NAR is saying. There's really nothing from stopping it at that point. Freight train, 8% is our next reasonable kind of statistical stopping point. The mortgage rate, the 30-year fixed, was hovering around 7.26 as of Tuesday evening, the highest level since November of 2022. Rates could go higher, said economists. The 30-year is at a critical stage, Larry Yoon said, chief economist, as we said. Okay, so if it breaks, it could easily go, if it breaks 7.2, mortgage rates could easily reach 8%. Wow, what would that actually mean for the market? Well, I think it would mean that even more potential sellers will be like, whoa, I don't want to sell. I have a 3.5% mortgage. Why would I want to trade that for an 8% mortgage? They're already saying that now at current levels, and they've been saying that for a while at current levels. They would even say it more if it went to 8%. They would say that even more at 8%. And so fewer houses to be sold, fewer things going on the market. Now, conversely, buyers might dry up and say, oh, I can't afford this anymore. I can't afford this anymore. So you might see buyers retreat from the marketplace. We have seen some metros. Texas is a good example, where prices are starting to moderate and actually even go down in some places. We haven't seen that here in Massachusetts at all. But there are some select places where we've seen some changes. And it's possible that if mortgage rates surpass this 7.25 threshold that we're at now, this inflection point. God, I hate that phrase. This inflection point. If it passes this inflection point, it's very likely to continue to go up to 8 from here. There's really no, apparently there's no psychological and or technical reason why it wouldn't hit 8 thereafter. So we are watching this, and if you're not watching this, really to keep an eye out for your clients, here it is again, down a little bit from its peak at 4.245 right now. If you're not watching the 10-year and mortgage rates on a regular basis as a real estate agent, you don't have your head in the game. You know, that's just clearly what it's at. So you want to be following that. At least, you don't have to be watching it every single moment of the day. But if you're not at least taking a look at it on a daily basis, it only takes a minute to kind of check on that, then you don't have your head in the game. I'm going to be very interested to find out today whether or not that 10-year Treasury closes. How close will it close to 4.3? Right? Will it close above 4.3? Well, that means rates are going up. If it somehow crumbles down and closer to 4.2 or weaker than that, then maybe this will be the peak. But we've got to keep a really close eye on that.